welcome to Voice of Crypto's Roundup of 2022. I'm Namrata Shukla and this is the second part of the 4-part series that we are doing on this crazy year. This video, we'll talk about the second quarter of 2022 from April to June. We will understand how the crypto market lost its footing and it failed to recover, beginning with the collapse of the Terra ecosystem. This was then followed by the fall of the Celsius lending protocol and then the crypto hedge fund Three Arrows Capital. In addition to this, we are also going to discuss some prevalent trends at the time like the craze of NFTs, the hype of metaverse, and the regulations that came into play following the crypto market collapse and businesses crumbling. As discussed in the previous video, the bear hit the crypto market pretty hard, and as we enter Q2, the bear only got stronger. At the beginning of Q2 2022, that is in April, most cryptocurrencies recorded massive losses. We hoped it was an April Fool prank, but sadly it wasn't. The crypto assets lost almost 80% of its value from an all-time high and modal which was in doubt. Let's have an overview of the cryptocurrency market beginning of Q2 2022. Crypto markets. The total market capitalization took a 58% hit during Q2. Meanwhile, the largest crypto asset, Bitcoin, had one of its worst runs. It fell by 70% after reaching an all-time high of $69,000 in November 2021 and bottomed at $17,600 during this period. This value was lower than its previous all-time high that was recorded in 2017 and 18. As Ethereum also stumbled in value, it noted more difficulties on the decentralized finance end. The pressure on staking and lending platforms was increasing consistently, which threatened the Ethereum treasuries, wherein ETH is a significant asset. The fear was twofold. One, the panic sell-off could escalate liquidation. Second, if DeFi protocol faced other problems, it would only add to the volatility existing in the Ethereum and the rest of the market. Other trends. Despite the crashing values of crypto assets, the observers noted an increased sync between crypto market and traditional finance market. However, with rising inflation and tumbling global economies, this trend could prove to be a double-edged sword. It could either cause another collapse of the crypto market or give once again crypto a chance to act like a knight in shining armor. So let's talk about investments. NFTs. The NFT craze led to a single-handed mass adoption event, with numerous brands launching their NFT collections. Magic Eden, the leading marketplace on Solana, received a valuation of $8 billion. Additionally, the NFT FI loans secured by NFTs showed that non-fungible tokens have more than just one use. Web3. Web3 remained a major category of investments given its business model and applications that interested everybody in tech. GameFi is still one of the major trends in crypto where gaming and finance come together. Most projects use gamification to attract and retain users. Gaming-related companies like Immutable believe gaming will be the leading area for blockchain-based Web3 services. This was evidenced by venture capitalist enthusiasm and investment. Reportedly, the blockchain-based gaming industry has generated $3.1 billion in investments in 2022, while adding an additional $6.9 billion in funds. However, given the bleak winter we are currently in, the investments in GameFi have massively dropped to an all-time low of $60 million in November. This was a 60% decline month over month. In fact, the total volume in GameFi has also dropped to $100 million now in Q4. DeFi. As we know that Bitcoin's second quarter was fairly lousy. However, it was even worse for DeFi. Data shows that the total value locked in DeFi fell dramatically by almost 67% in Q2. It recorded $220 billion in TVL at the beginning of the quarter. However, it could not sustain this level and sunk to $72.87 billion at the end of June. This TVL was 3 times lower since the beginning of the year. Enter Terra. Terra played a crucial role in the collapse of the DeFi market. So let's sit down and discuss Terra. History of Terra. The Terra network was formed in 2018 and rose to meteoric fame in 2022, only to come to pieces. While the market was suffering in Q1, Terra's Luna token was cruising through and reported an all-time high. In fact, during mid-January, Terra founder Do Kwon announced the launch of Luna Foundation Guard, an organization mandated to build reserves supporting the USD peg amid volatile market conditions, and also allocate resources supporting growth and development of the Terra ecosystem through grants. The LFG raised $1 billion through the sale of Luna token, with Jump Crypto and Three Arrow Capital leading the investments. This raised amount was used to buy Bitcoin for the USD's reserve system. It was later found that in March, LFG purchased 125 million worth of Bitcoin, which is equivalent to 2,840 Bitcoin at the time. However, it was technically following up on its promises of adding BTC as an additional layer of security. Towards the end of May, LFG's Bitcoin wallet address purchased over 27,000 Bitcoin, worth 1.3 billion at the time. This added momentum to Terra's Luna token value and pushed it up by 10% in 24 hours to mark an all-time high of $106. Many showed support to this new value of Luna, including the co-founder of hedge fund Three Arrows Capital, Kyle Davis. Shortly after, LFG started adding more and more BTC to their bag, and by 11th April, it had a total of 39,897.98 BTC, then valued at 1.67 billion. As everything appeared green for the Terra Luna ecosystem, Luna outperformed the market to surge over $90, a 17% hike in a day, while USD climbed the ladder to become the third largest stablecoin. However, cracks started to appear in this ecosystem from the beginning of May as Curve Whale Watching, a bot that monitors and tweets large amounts of swap, highlighted 85 million USD swapped for 84.5 million USDC. The value of USD dropped to a low of 0.985 cents on 8th May. This was after a series of large dumps of USD on Terra's lending protocol Anchor and stablecoin exchange Curve. LFG committed to loaning 750 million of Bitcoin to market makers to maintain USD's peg, and another 750 million was promised to be used to buy back Bitcoin after the volatility had subsided. While the co-founder Do Kwon tried to joke his way out of the USD depegging, the stablecoin was depegged once again on 9th May and dropped to 0.35 cents. Even though Kwon had assured that he will be deploying more capital, there were claims being made that USD depegging was a brilliant Soros-style attack when George Soros bet against Bank of England and had won. On 12th May, Luna price fell 96%, pushing it under 10 cents. The trust was shaken and the exchanges like OKX and Binance ended trading Terra tokens. Although Kwon posted a revival plan that would route the ownership distributed to USD and Luna holders through 1 billion new tokens, many had lost faith. Impact of Terra falling on the rest of the market. Terra collapse was just the beginning of the collapse of DeFi, as many other projects felt the impact and tumbled at once. Crypto fund Three Arrows Capital was one such project that followed suit. The fund's founders had admitted of taking 200 million in losses related to Luna and the now imploded stablecoin USD. Suzu, one of the co-founders of the hedge fund, had talked about their failures to realize that Luna could potentially fall to zero within days, which would lead to a massive credit squeeze across industry. Being Terra's most vocal supporter, 3AC was also one of the biggest holder of GBTC, an institutional Bitcoin product. As it was a regulated product, GBTC allowed its investors like 3AC to purchase directly by giving Bitcoin to the trust. However, as the price fell across the board following Terra's collapse, GBTC lost value and shares value slipped to $12 in July from $34 at the beginning of the year. Although 3AC tried to achieve stability through borrowing from lenders and expecting the market to rebound, BTC's fall to $20,000 in late June put 3AC's position to go askew and made it unable to repay any loans. The fund lost money on Luna, their GBTC shares were trading at a discount, and overall market crash meant all altcoin holdings were also failing in value. Basically, the main reason for 3AC to go belly up were trades involving GBTC, Terra's Luna, and Terra's USD, that is their stablecoin. However, 3AC was not alone to have felt a strong blowback from Terra's collapse. Lending platform Celsius joined the bandwagon. While Celsius was already in crosshairs with the US regulators due to its ARN product, things took an ugly turn when Terra USD and Luna collapsed. The collapse didn't only shake the market but the consumers' confidence and acted as a catalyst for crypto winter. This spurred major sell-offs across the market, causing a bank-run style series of withdrawals by users from Celsius. Shortly after, in July, Celsius filed for bankruptcy, and its filing it attributed the liquidity crunch to the domino effect of Luna's collapse. As per a court filing from Celsius advisory partner, revealed the company has a 1.2 billion hole in its balance sheet. Many Celsius clients are still waiting for their money and crypto back. So Terra has collapsed, and so have many other lending protocols and crypto businesses and exchanges. Q2 was filled with resistance in price and also the trust of people. Q3 is next, and let me warn you, it would mainly comprise of further disappointments and much of Elon Musk. So stay tuned.